I've heard it enough now. I'll answer it. I'm hearing Bryan. You've said you don't like turnkey rental properties, but isn't rental property a fundamentally good investment? Why do you dislike it so much? I'm Bryan Ellis. I'll answer that for you right now in episode number 94.
You're listening to Self-Directed Investor Radio, America's only podcast exclusively for affluent, self-directed investors, where each day of the week you receive innovative investment strategy and deadly accurate market analysis that's untainted by Wall Street and unblemished by government propaganda, all in 7 minutes or less. Coming to you now from iTunes, Stitcher, and SDIRadio.com, here's your host, Bryan Ellis.
Ladies and gentlemen, thank you so much for your patience. During the last several days, I've been on a family vacation, and I still am through this week, but I'm going to do my very best to provide an episode to you every day this week. So, turnkey rental properties. You guys think I don't approve of a turnkey approach to real estate investing, right? Wrong. Nothing could be further from the truth. We offer a turnkey real estate flipping opportunity, and turnkey rental property investing can be a really valuable tool as well, if some things are there to protect you. But before I begin with the business about turnkey rental properties, I'd like to give you an important heads up to those of you who are seeking a diversification for your capital that really meets the S3 standard of simple, safe, and strong. My team of professional real estate flippers are putting up some extraordinary numbers for our clients with a track record of amazing consistency. We have an opening for a tiny number of additional clients right now, and this is an opportunity not to be missed if you're an affluent investor with at least $100,000 in liquid capital. To find out more, go over to s3flip.com right now. Again, that's s3flip.com. So, turnkey rental properties. My friends, real estate investing isn't simple like stock investing. Setting aside the selection and usage of real estate to generate profit, which are themselves very complicated, the transactional side of real estate like financing, closing, titling, legal considerations, etc., all that's very complicated and very expensive. It's also not a simple thing to find tenants and even harder to find a reliable property manager. So to have a service that does all of that for you is a great thing. I do not deny that at all. And I'll be honest with you. I'm on the hunt for a company who can provide great rental property investment opportunities to you, my valued listeners to Self-Directed Investor Radio. But here's the thing. Because I truly do value you, there's no way I'm going to recommend an investment opportunity that I don't believe meets the S3 standard of simple, safe, and strong. So can single-family rental property investments ever meet that standard? I think absolutely yes. So let's look at how that could be true, and then I'll tell you precisely why you should steer clear of the vast majority of the turnkey rental property companies out there. Rental property investing is conceptually simple, to be sure, particularly when being handled by a professional and experienced property manager. It can be safe as well if buying at the right price and right terms, and it can be safe as well if buying at the right price and right terms and right property and market conditions, and the returns can be strong if you buy in the right place at the right time. But my friends, I'd like for you to understand something. There's a huge difference between the historical understanding of rental property investing versus what the turnkey operators offer to you. The conventional understanding of real estate investing goes something like this. You buy a house in a suitable geographic market, and you must buy the house inexpensively enough so that you have equity from the start. And bringing the property up to rent-ready condition, a good objective is to have at least 20% equity still in the property at that point. You then rent the property to a tenant, putting away most of the income knowing that certain expenses will absolutely happen. One of those expenses is property maintenance, which is invariably far more expensive than you think and can easily average 40% of the income from your property. Another of those expenses is vacancy, and the wisest standard for vacancy planning is to assume 75% occupancy. Another of those expenses is mortgage payment if you finance the property, and some more of those expenses are property managers, well worth it, but still expensive, along with taxes on your rental income and on the property itself. But if you view the rental income to be a cushion that's primarily designed to absorb some of those expenses, then over time, probably 3 to 5 years down the road, you'll have built up enough cash savings on this property that if all is well with the property, maybe you can begin enjoying some of the cash flow at that time. And at some point in the future, probably 15 to 30 years down the road, you'll sell the property, which will be free of debt and will hopefully have appreciated very nicely. So that's the traditional view of rental property investing, and it's a very responsible view. Entering into rental property investing with an approach like that makes a lot of sense. But how's that different from what the turnkey companies are selling? Folks, it pains me to point this out because the reality is that I have many, many good friends in that business. But here's the basic pitch that most of the turnkey companies offer. You should buy this house and several more after it because doing so will yield a large cash flow for you. You can expect a cap rate of about 10 on this deal, so it will be very profitable for you. I'll also have my own property manager who I've vetted and confirmed will do a great job for you to handle the entire thing for you so that you never have to worry about tenants or toilets. My property manager has a 97% occupancy rate, so vacancy shouldn't be a problem, and you'll definitely have a paying tenant in place on the day you buy the house. Plus, you'll get great tax benefits along the way, so this is a win from any perspective. Well, that's what the turnkey property companies tell you, but here's the thing. All of that sounds great and technically could be true. But to assume that a 97% occupancy rate will always apply to you, or that the cap rate of 10 actually factors in the real expenses and risks that they're hoping you'll ignore, such as real vacancies, well, that's not just irresponsible, it's financially dangerous. And here's one more thing. You'll never hear turnkey companies talking about how you're getting a good value on the property versus the retail value in today's market. In other words, if you have the property appraised before you actually buy it, and here's one more thing. You'll never hear the turnkey companies talking about you getting a value, about you having equity going in. In other words, if you have the property appraised before you buy it, what you'll quite certainly find is that the price you're paying to the turnkey company is the same as or actually above the current value of that property in today's market. That is a travesty, my friends. I'm not aware of any turnkey rental property companies that insist that their clients have properties appraised ahead of time because virtually all of them sell these investment properties at or above market prices. Folks, have you ever heard of it being smart to buy an investment above its real value? That could make sense if you have the ability to turn a piece of property into something much grander, much greater, and more valuable, but that's not the plan. You want to buy the property to rent it out. And my friends in California, you should be particularly careful. You're a great target for this type of pitch because your real estate values are so extreme and crazy that for many of you, you've had the experience of making an offer on a property above the market price and a few years later selling for a huge profit still. So you're less likely to be sensitive to purchase price. And that's a terrible thing because number one, it's always fundamentally unwise to pay more for an investment than it's worth. And number two, it's extremely likely that the rental property you buy is not located in a market where the real estate has intense boom cycles like tends to happen in California. And to everyone, regardless of where you are, I'd like to say that there are some good turnkey rental property companies that are operated with integrity. Not many, but some. Truly, this is an area to tread lightly and to always give yourself the benefit of a few days to make careful considerations before committing your capital. My objective isn't to hurt the turnkey rental industry, but to protect your capital. My enemy is risk. My enemy is loss. I want to protect your capital. But if you happen to know of a turnkey rental company that is consistent with the S3 standard, including the need to buy real estate for something below its current market value, then reach out to me. I'd love to know more. My friends, invest wisely today and live well forever.
Thank you for listening to Self-Directed Investor Radio with Bryan Ellis. Don't miss a single episode. Be sure to subscribe to Self-Directed Investor Radio right now on iTunes, on Stitcher, and at SDIRadio.com. Your feedback is always welcomed via email at feedback@SDIRadio.com. This show is for entertainment purposes only and is not intended as legal or professional advice for your situation. Content is the property of the Self-Directed Investor Society.